Now, Bitcoin is down with the Fed. Oh, we got a rate cut. That's so bullish. Here we go. And Bitcoin turns down. Oh, the Fed, they're starting QE. The Fed is not starting QE. They're injecting money into the system to try to create financial stability. There's massive problems right now. Yet I see person after person on social media, oh, this is QE. This is not QE. I'll explain it. But you got people that don't understand what's going on. And again, a lot of the so-called experts and the moon boys, a lot of them saying that this is QE, and this is not QE. Now, again, I've told you the red areas, the highlighted areas here, are the declines that have happened with the last couple of Fed meetings here, the last four, and now we get the one right now. And again, we've had sharp sell-offs over here back in June, 7.69%. Back over here, or I'm sorry, that was the May meeting. Oh, that's right. That's June. The June meeting, the July meeting, again, over 6% sell-off. The September meeting, we had the head and shoulders. That gave us a left shoulder. We were down nearly 8%. And then we had the right shoulder. And the head and shoulders played out with the last Fed meeting. We lost 29% from the Fed. I told you ahead of Thanksgiving we were going to bottom. Oh, what did we do? We bottomed. That was correct. We're going to get a rally, and it's going to be a counter trend into Thanksgiving. And I told you if the bigs, the big institutional guns, if they didn't come back and sell immediately, I told you this could drag out into the Fed meeting, and we could sell off with the Fed, as we've done at these other times. You're likely now starting the next two legs down. I think you'll see one in December. You'll probably bottom out, get a rally surrounding Christmas and New Year's, and get some kind of counter trend for wave 4. I think that this is the wave 3 still under construction, this whole thing being the wave 3. Then I think you get wave 4, and then I think you get your wave 5 into January. That's where I think the Fed's going to panic. The stock market is now getting a post-Fed sell-off at the moment with futures, along with Oracle. Stock market's going to play catch-up with Bitcoin, and you're going to see Bitcoin drop to further levels. Right now, we're headed back towards the April low over here at 74,000. Talked about this head and shoulders back up at the top. Oh, no, here we go. We're going to be sorry. And what happened? I was right. Bitcoin's dropped 36%. We dropped down to 80,000. We were told back up here in October, and again in November, we're on our way to 200 to 250,000, and we're going to be there by the end of December. Well, here we're closing in on the end of December, and we've had a 36% drop. We were told Bitcoin was going to increase $2 trillion in market cap, in less than 2 months. It's never happened. Bitcoin do? It lost nearly $1 trillion in market cap. The complete opposite to what the experts and the moon boys were saying. And I told you, I predicted they're going to move their targets into the future. That's what they did the last time. What are they doing? They're moving their targets in the future because they were wrong. I told you back at the top, I see evidence of a top, and that's why I called a top and predicted the sell-off, and it's not over yet. And again, I'm hearing people call another bottom here, that we've had this bottom and here we go, and yet they've called everything a bottom. They never saw the sell-offs coming, and yet they keep calling everything a bottom. And then down here they'll call another bottom, and down here they'll call another bottom. Finally, we'll get this massive rally back up, but it'll just be a large bear market rally. Our bear flag has now evolved into what looks to be a rising wedge by going up here just slightly higher and turning off our trend line. This is with our linear scaling. We're turning off the trend line right on the nose there. Look at that. Parallel boundary down here to here. You've got a really nice looking channel. We are in a downtrend until proven otherwise. And it's not over. 80,000 is not the bottom. We got the counter trend. I told you we were going to have that happen. We got the bottom. I told you that was going to happen. But now we're going to resume the decline. These other Fed meetings have produced sell-offs. And again, this one's likely going to give us a sell-off probably into the holidays here, some kind of bounce, and then another bigger sell-off in January in all likelihood before we get the bigger rally. More about Bitcoin, watch the video all the way through. Right now it's down 2.10% here as we're now in the day after the Fed. We're doing exactly what we did over here. Let me just bring it in close here so you can see it. We've got these topping tails. We got the topping tail with the Fed day. We had a rally and we turned into the trend line and we turned down. We had a topping tail the day before. Same thing over here. We got these topping tails surrounding the Fed meeting, and very similar to the topping tails at the top at major resistance. You know, we've gotten these 9 counts marking tops and bottoms. I told you I expected, one of the reasons why I expected a rally was because we were setting up this 9 count, and because the Wyckoff distribution model that we've been following was suggesting we get a rally, but it's suggesting a bounce and then we're going to resume the decline. I was listening to one so-called expert saying, oh, everybody's panicking and I called the bottom and you only understood that we'll be at new highs soon and what's about to happen. Again, already topped. We already completed the top. We've already confirmed a bear market. We're going to go make new lows, and all these people calling yet another bottom, again, are going to now be, you know, doing damage control and explaining why Bitcoin keeps dropping when they keep calling everything a bottom. And they told us at the top we had a breakout. It was a fake out, as I told you, a fake out, and we slammed right into major resistance. Now, I do want to say this. The counter trend, again, likely done with this rising wedge kind of formation. We have the 9 count. We've started the 13 count. You're likely going to see the 13 count eventually set up either with this next leg down or the one that follows. There could be interruptions and it can stop. The 9 counts, they don't stop. They have to be consecutive back-to-back bars. We finished the 9 count. We started the 13. We're on bar number 6 now. When we start selling off here, you're going to see this 13 count resume. Eventually, you're going to see it form a bottom. Either we're going to try to form a bottom at 74,000 or probably more, getting closer to a 50% drop. That would take you down towards 63,000. 80,000 is not the bottom. We don't even have a bullish divergence yet in the daily time frame. Make sure you watch the video all the way through. I'm going to be explaining why we're about to get a dramatic drop. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like my charts, you like my indicators. The indicators and charts that have been right. Please take a moment to partner with me and support the channel. Most YouTube channels have sponsors. I turn those offers down. I'm not here to sell you anything. I'm not here to send you some exchange that wants to get you all leveraged up to wipe you out. I'm here to talk about Bitcoin and share. Whoops, sorry about that. I'm here to share with you information, the information I use to make my Bitcoin decisions for Bitcoin. I'm here to share with you information about Bitcoin, not to try to sell you something. If you could just take a moment, follow the link below. It'll take you to a secured site. You could donate any amount you want, but if you could just take a moment to partner with me. I don't know about you, but these signals have really, really helped me. Extremely bullish at the bottom over here, calling the very day of the April bottom. Signals helped me call the October top. If you like that kind of cutting edge information and find it as useful as I do, please consider supporting the channel today. Again, I've posted this chart near the top here, got laughed at. And it continues to play out. This is the log scaling. The other channel we're turning off of is a linear. But again, I think that, again, you're going to drop down to 74,000. That's a 41% drop. 63,000, you'll probably get closer to that. A 50% drop. Maybe just under that or just over that. And I think you get the massive bear market rally that's going to be spectacular. I'm going to get bullish somewhere in between these levels here, looking for a bottom. You're going to likely form a divergence, getting the next leg down, taking out 80,000, coming here, probably going just under 74,000. And then I think you'll get a rally back up for the wave 4 I've talked about. Watch the video all the way through. You'll see my amazing signals, some of my charts. Told you we could see back-to-back signals here. We actually had one just a little bit ago, but we're trying to rebound off of the lows. You had back-to-back major sell signals here with Bitcoin. You had one over here. went a little bit higher, again forming a rising wedge, and we had one just a little bit ago, and we're trying to rebound off of the lows right now. We were down nearly 3%. Now we're down just under 2%. But again, you're likely going to see back-to-back signals either today or tomorrow. Whether it forms today or tomorrow, we'll see. But it'll probably form in the next day or two. Beautiful signal at the top. We had this signal telling us we were going to rally. We had this signal warning, hey, rally could be over. We went back up, got bullish bars again, really forming that rising wedge now. You'll probably see another major sell signal here in all likelihood in the next day or two or three or so. Probably, though, in the next 2 days, today or tomorrow. Again, 80,000, the low over here, the 36% drop is not the bottom. Signals nailed it. My signals called this correctly, and I'm telling you, this is not the bottom. Likely put in a short-term bottom at much lower levels by January, but that's not even going to be the bottom. That's just going to give us a larger counter-trend rally, a bear market rally. It's going to go on another 10 months, maybe longer, maybe, in the first half of 2027 somewhere, because we're going to have a banking crisis. We're going to have a recession. Watch the video all the way through. And at the end of the video, you'll see some of my amazing signals. Okay, Bitcoin selling off with the Fed. I told you this was going to be the case. We were going to get that rally going into Thanksgiving, and I told you it might go as long as the Fed or just before the Fed. But I predicted that rally, and I told you 80,000 is not the bottom. All the experts calling the 80,000 low as a bottom are about to be surprised because it's not the bottom. At the Fed, and again, got to cut. Oh, that's so bullshit. And Bitcoin goes the other direction. I talked about this in my stock videos earlier in the week. Again, Fed Fund Futures has been anticipating that the pace of the rate cuts is going to dramatically slow to a snail's pace. Here, expecting only 2 more cuts by the end of 2027, and they're below 50%. The Fed doing what I said they would do, giving us a hawkish cut. They're doing a cut, a quarter-point cut. I told you that the Fed Powell is trying to tell us, oh, no, we're not going to do a cut. But Fed is now officially pausing, trying to pause. They're not going to be successful in doing it, just like last time around, the last meeting in October, they tried to tell us, oh, there's not going to be a December cut. Eventually, when they start doing it again, they're going to do an emergency meeting and likely do jumbo cuts. I think that comes by January. But the Fed is seeing a slower pace of rate cuts. Can't make this stuff up. I mean, they are so clueless that we're about to start a recession. They're pausing. And, the last time around, Powell said, oh, we did 2 cuts. We've stabilized the labor market. And then what do we see? A negative number with the private payrolls. What was it, negative 33,000 or something like that? I told you, they have to do a cut, even though they tried to tell us they weren't going to do one. And right now, we're moving into recession. Now they're telling us, oh, we're only going to do 1 cut for 2026 and 1 more cut for 2027. Powell going on with, his usual talking points. Oh, we're in a good place, and we're going to wait and see how the economy does. And again, the Fed should be slashing rates right now. We're about to move into recession. I told you I thought it would start either this month or January. We won't know that until the end of 2026, towards the end of 2026, and they'll say, oh, the recession started officially on such and such, a month. This is how far gone the Fed is. We're about to start a recession, and they're only forecasting 1 cut in 2026. So they're pausing. And this is why Bitcoin is selling off. Exactly what I told you would happen is that we'd see a sell-off with the Fed. That's what we've seen. But they're signaling they're going to pause here. We've seen yields break out and now back testing, and again forming an inverse head and shoulders, a bullish falling wedge breaking out, back testing, and that evolved into a bullish inverse head and shoulders pattern. Again, telling us yields are likely to go higher. As I say in my stock videos, and I show this chart quite a bit, but again, I think that you're forming this massive triangle that's going to break out. I think you're going to see longer term yields here with the 10-year end up breaking out and going higher, and I think that's going to freak markets out, and we get Jamie Dimon's crack in the bond market. No, we've seen the Fed inject billions into the banks recently, the most that they've done in 5 years since the pandemic. Again, we're about to have a banking crisis. The Fed's saying they're going to inject more money in the system. And again, there's a hoax out, and another new hoax. Surprise, surprise. This is QE, and you got all the moon boys and the so-called experts. Everybody's running around. Oh, QE starting. Here we go. And again, they're trying to stave off a banking crisis right now. They're having problems. That's why they're doing this. It's a bad thing, not a good thing. This is not stimulus. This is trying to create financial stability because things are broken, because the Fed's policies lead to negative outcomes. The moon boys so addicted to QE believe this is QE. It's incredible. It is absolutely incredible. But the Fed is saying they're going to start a bond buying program here that will be short-term. QE's been long-term, generally long-term bonds. This is short-term bonds. Difference here. And they're doing this to try to manage market liquidity. It's going to buy $40 billion in treasury bills. Did this the last time quantitative tightening stopped, QT. All said back then, this is not QE. Reaffirming that this time around, but yet the moon boys, they're heard. The moon boys are heard. The experts, oh, this is QE. This is not QE. I got told so many times, oh, the Fed's doing QE. Here we go with Bitcoin. And what's Bitcoin doing? Selling up because the Fed is going to slow the pace of the rate cuts. And because this is not QE. But again, you got people that are delusional, don't understand what is happening here, and that's why I'm taking the time to explain it to you. The Fed is going to start this. They're not waiting to January. Again, that should tell you something right there. We're having problems with the financial system here. The banks are in trouble. They've injected billions. Now they're doing this. There is a huge problem. We're going to have a banking crisis. That's what this should tell you. They've injected billions previously into the banks to try to prevent a banking crisis. Now they're trying to stabilize the financial system. This is a massive red flag. But yet again, the moon boys are so far gone. Oh, things are great. This is QE. Here we go. And they don't see the recession's about to happen. They don't see we're about to have a banking crisis. Absolutely incredible. And Fed is intervening because there are problems. And yet they think, this is great. This is QE. So they're not waiting around. They're going to start this. December 12th. Another red flag. They're needing to start this immediately because there are problems in the system, the financial system, and it needs to be tended to immediately. Now, I did a post on this on Monday. B of A was predicting this was going to happen. Again, the Moon Boys were saying they predicted it would start in January. The Fed is having to start it immediately. But this is not quantitative easing. Is what they're doing is RMPs, Reserve Management Purchases, which are focused on purchasing short-term treasuries, okay? Well, quantitative easing it involves purchasing mostly of long-term treasuries and mortgage-backed securities. The RMPs are a technical fix to ensure the banking system has ample supply of reserves. The reserves are low right now, which helps maintain orderly conditions in short-term money markets and prevents potential disruptions to the financial system. So you have to ask yourself, if everything's so great and there's no problems and we're gonna just avoid a recession, and there's no concerns about the banking system and financial stability, then why are they doing all this? You got to ask yourself that. If they're doing this because we're having problems with the banks. They're trying to prevent a banking crisis. Do you not see this? It's incredible. And people, oh no, this is QE. Here we go. And again, this is not QE. This is not QE stimulus. This is the Fed injecting money They're injecting money to try to stabilize the financial system. This is a massive red flag. Bitcoin continues to follow the Wyckoff distribution model. Posted this chart near the top. We have followed it pretty much spot on. Here's the April low scenario. We went up here. We had a peak and a breakout of these two highs, and it was a failed breakout, just like on the Wyckoff distribution model, schematic pattern number one. And then we ended up retracing the entire advance. That's what's happening. This is why I predicted that we were going to get a rally. Now, it's likely ended with the Fed, and we're probably getting the next leg down, and that will take us back to probably just beyond the April low. But this thing has played out pretty spot on. Perfect, but pretty close. We continue to follow it, which again, this is why I predicted that we get a rally. If we continue to follow it, we should come back down here and take out the 80,000 level and continue to drop down towards 74,000. So again, all those calling a bottom, they're going to be having to walk it back and do damage control and try to explain why we're moving to new lows when they told us we're forming a bottom. And you got the world's highest IQ holder telling us, oh, we're going to be at 100,000 by, in the next 6 days here. Or is it 5 now? Next week, and again, we're likely going down to take out 80,000. Well, Tom Lee's bullish. Tom Lee's always bullish. He's a perma bull. He told us back up at the top we were going to be at 200 to 250,000 by the end of December. Here, we've done the complete opposite. You got all these experts telling us how we're going to be 200,000, 250,000, and they keep telling us everything's a bottom. Buy the dip. They keep telling us to buy the dip that keeps on dipping. So-called moon boys and experts, and said that backwards, so-called experts and moon boys. And again, the sell-off's not over. And this is what, again, I believe is happening, and we're turning off of this trend line. This is, again, our linear scaling, nice looking channel. We're likely completing the intermediate wave 4. We're going to get intermediate wave 5 and complete primary wave 3, then get a primary wave 4 surrounding the holidays in all likelihood, and then you're going to get one more push down going into January. And then the Fed, I think, will panic in January, probably the first 3 weeks there somewhere, for their meeting at the end of the month. And I think you'll get emergency rate cuts in January. If I'm wrong about that, it'll be February or March in all likelihood. But again, I have the guts to tell you what I think, and I think it will be by January. But the Fed is often late to the party. It takes them a long time to figure things out. They're clueless that we're about to start a recession. Yet they're having problems with the banking system. They're so arrogant, they think that, we can resolve it with our tools. Their policies lead to negative outcomes, always. Then I think you get this massive bear market rally. I'm going to turn bullish down here somewhere when I see evidence of a bottom. And then I think you're going to get a massive rally up towards the 90,000 range, which we're just turning off of right now, or the 100,000 level. Talked about the 4-hour chart. And again, I believe you have primary wave 1, primary wave 2. I believe that you have intermediate wave 1, intermediate wave 2, intermediate wave 3, and we've now likely completed intermediate wave 4 in what looks to be a complex correction. If we've completed, and I told you down over here, I said we're going to bottom and we're going to get a counter trend rally, and I told you it can go to the low to mid 90,000 range, and I told you it may go as high as moving towards 98,000 but not exceed 98,900. I told you it might go to the high 90,000 range. I was right. We only hit this 94,000 area, hit it a couple of times, and we turned off of it yet again with the Fed now coming off of the trend line. And this is the log scaling here, but our linear trend line, we've turned off of it. And remember, I told you we can go up to this 200 period. You see the black line right there? That's the 200 period. I told you here we tagged it. Over here we overthrew it. Over here we came to just under it. And I told you we can hit this level and retreat off of the 200 period moving average. That has happened. I told you again, we might have the rally with Thanksgiving, and then they might come back and sell immediately, or this might drag out into the Fed because we get these Fed sell-offs. And I've talked about both of those scenarios, and right now it's dragged out into the Fed. Rally I predicted is likely over, We're now going to move down in a 5-leg push lower to complete intermediate wave 5, to complete the primary wave 3, and then over the holidays I think you'll get the primary wave 4, and then after the holidays, after New Year's, we'll see the sell-off resume in all likelihood, going down into a January low. CDs rolled over. You've got multiple point diversions right here on the RSI right here. You can see that, and we've got down here pring parameter. Look at pring parameter. Pring parameter up here doing what it did the last time. It was about to roll over right here, and it occurred at 116,000 at the final exit point. Again, you're likely getting this next leg down, and see pring parameter roll over. Pring parameter will likely end up forming a bullish divergence before all is said and done. Bitcoin's getting rejection here at resistance levels. This is where we found resistance and resistance and resistance over and over, and you're seeing it again. Now, there is no bullish divergence on the RSI or the MACD here with Bitcoin. The RSI has pulled up to the 50 level. It's pegged in the negative region. It's turning down off of 50 as we stall at the trend line with our linear scaling, which I'm showing you in this video. This is the log right here, and we've rallied up to the levels I told you. I told you we go up to that low to mid 90,000 level. I told you we might get as high as the high 90,000 level, trying to move back towards 98,000, but I told you we would not exceed it. Everybody was bottoms in, here we go, we're going to be at 100,000. And we're not. We're going down to take out 80,000. Again, you're pegged in the negative region here with the RSI. The pull-ups to the 50 mark the counter trend peaks, which we've seen with these last two peaks. Just as we saw back over here with the short-term peaks right after the final exit point, which turned up just above 50. So you've been consistently in the negative region below 50 throughout this decline, just getting slightly above it with the final exit point there and then turning right back below it. But the pull-ups to this 50 area, this is where the counter trends end. There's no bullish diversions either on the MACD. The MACD is likely going to form a divergence. Now, again, we might get a multiple point divergence before all is said and done, but this is telling us we're likely going down to the April low, and we'll probably end up taking it out. That's at 74,000. Stochastic looks like it's forming its own little divergence in the more recent price action right here, and again, likely to roll over and to sell off. So again, those telling us bottom is in, and here we go, and slapping each other on the back. Oh, we're so smart, we called another bottom. When, again, this is nothing more than a counter trend rally to suck in more of the perma bulls, suck in the herd, and we're going lower. Confirmed a bear market in the daily, the weekly, and the monthly time frame on my indicators which are correct. But again, you're not going to bottom until a divergence. You might try to form a bottom around the 74,000 area, just under it. My guess is that you're going to end up going lower, closer to the 50% level. As I've said and have been warning since the top, we're going to get a 40 to 50% sell-off. This is what? Now, week 10? This is week 10, I believe. Week 10 since I called the top here and told you this was going to happen, yet I've been right and told all the way down how wrong I'm going to be, and oh, you're going to pay the price, and yet the perma bulls have paid the price. You listen to my warning signs, it gave the proper time to exit long positions and either move to cash or consider short positions, and that was back up at the top in the final exit point. All the opportunities back up at the top. Oh, so sure. Then why don't you short it? I did. Back up at the top. That was the opportunity, not after a 36% drop. Now, the counter trend's another opportunity for the bearers, not a recommendation to buy or sell. Oops, sorry about that. Had a technical issue for a second there. Not a recommendation to buy or sell. I'm just telling you that, again, the counter trends are the shorting opportunities for the bears. Top at resistance, start of the reversal, the counter trend for the final exit point for the back test of the trend line. These were all opportunities. I talked about them back at the time. A drop of 36% to 80,000 is not the opportunity to start shorting. The opportunity was at much higher levels, which we've talked about at great length and detail. The people that have held on to this or bought the breakout in the top and all the buy the dip, and how's that buy the dip working out, by the way? Not too good, huh? I'm saying buy the dip all the way down, the dip that keeps on dipping. Those that didn't sell Bitcoin or didn't short Bitcoin, they're in a world of pain. We've dropped 36%. We've gotten a little bit of a rebound here into the low 90,000 area, but again, we're going to go down and take out 80,000, and there's going to be more pain. Watch for divergences to develop here. I think that will start to happen here under the 74,000 area, just under that level, and then I think you'll get a holiday rally as everybody goes away for the holidays. You'll probably see a bounce, and then we'll probably resume the selling in January and then bottom out in January, as I've been saying throughout this entire decline. Now, I want to draw your attention to the Bollinger Bands here. The Bollinger Bands here with Bitcoin are tightening up. Do you see this? This is telling you something big is about to happen. The last time we saw the Bollinger Bands tighten up like this, we got this drop. Okay? You've seen the Bollinger Bands begin to tighten right before big moves. We had it right before this drop right here. We had the Bollinger Bands tighten just before we had the drop to the low, and then they tightened again just before this big move up. Bollinger Bands tightened over here just before we ended up going and testing the highs at major resistance. The Bollinger Bands tightened up here just before this drop, and you're likely going to see another drop follow the tightening of the Bollinger Bands here. And I'll just run through some of the charts here for you. Again, signals trying to flip back to bearish here. We're stowing at the orange line. I talked about stowing at the orange line or just under that 98,000 area under the purple line. That's what's happened. Again, I told you we'd go to that low to mid 90,000 area. And we did. We're going to sell off some more. Beautiful sell signal at the top on the weekly chart. We've gotten this bounce, a short-term signal, but ours are still bearish. Again, you're likely going to resume the decline. Here we're doing pretty much what we did back over here. Again, moving back up towards the dots, trying to turn back to bullish and reverting right back to bearish. Same thing over here. And right now, today, we're turning back to bearish. We formed a bearish rising wedge pattern here. Signals are still bearish here. Signals have been bearish right after the top there, and with the liquidation move, they've been bearish on all these counter trends. Nothing's changed here. And again, likely headed back here to 74,000, the April low. I think you'll bounce around in the holidays, and then I think you'll take out whatever low is made there. I think you'll bottom in January. Here we're coming right up to the ribbon, turning right back down towards the ribbon here, turned back down, turned off of the ribbon here, drop below it. Got a fake out move to get the divergence and slam into resistance. Reverted right back to bearish after the August high.